Alright, so welcome to the lecture about the high impact news drivers. This is a lecture that is from the month 2 of the StoianCapital private mentorship. This is Stoyan, and let's begin the lecture. In today's lecture, what I want you to remember from our past lectures is the smart money paradigm and the market capitalization understanding. We're going to also go deeper into top-down analysis, understanding the time frames from a weekly chart down to a 15-minute chart, down to a 1-minute chart. We're going to also we're going to recap the higher time frame bias narrative. We're going to also use that. We're going to use a weekly bias determined by whether the market's going to go higher or lower. And I also want you to understand the fact that the bias is determined using seasonal tendencies and underlying weekly market structure and institutional order flow signatures. So the high impact news drivers and weekly candlestick correlation. First of all, where do we see the high impact news drivers? For the high impact news drivers, what I look at is the Forex Factory calendar, and I look specifically for the USD red folders and the orange folders, and sometimes the white in case of a bank holiday. What type of high impact news drivers are we looking for? The high impact news drivers that affect how and when we will trade on a weekly basis, and the high impact news drivers that affect how and when we will trade when the weekly affecting high impact news drivers aren't present. And why do we care about the high impact news drivers in a smart money perspective? To understand the smart money perspective, we have to identify how the retail-oriented traders are going to see these high impact news drivers. So basically, when retail traders are going to see these high impact news drivers, they're going to try and go into the market and they're going to try and gamble when these time periods come. They're going to try and get a big movement, and this means that we're going to have an understanding of how liquidity stands at the or after the high impact news driver event. So where are the buy stops and where are the sell stops, correlated with our daily and weekly bias. We will also understand the roles of the algorithmic phases. So when the market consolidates, it accumulates both buy orders and sell orders above and below the market. When the market expands towards an opposing liquidity pool to our bias, that is when smart money begins its capitalization, using retail orders to get into a position. When the market expands towards a liquidity pool within our bias, that is when smart money offloads or distributes their positions according to the AMD concept or power of 3, which is the basis of our trading. And we're going to amplify upon that. And when the market retraces into an inefficiency, having an unrealized higher time frame target above, smart money accumulates more positions. Right here, I'm going to recap what is the retail purging paradigm. Basically, what we're looking at here is the market consolidating. Trailed retail stop losses are going to be here below this level of a quote-unquote support. So they're going to see this as a means of support. And we're going to also have people that are going to go short on a breakout. So these are both retail traders that are going to have their stop losses inside of this price range. So what the market does in a smart money perspective, that's where we accumulate our longs below existing levels of sell stops. Same time, retail traders are going to see this as a means of resistance. They're going to try to go short, or they are going to try to go long on a breakout. So we are, number one, capitalizing on their sell stops by going below this sell side liquidity pool. And then we're going to also capitalize on the people that went short on a breakout because they have their stop losses inside of this range. Same thing goes here. Market retraces back to take off these people that were long on a breakout, and then we continue higher into our high time frame target. I want to introduce you rather to the core concept of our trading, which is the weekly bias. So on a weekly bias, if I anticipate the market to go higher, not necessarily with speed, but just to go higher, how I want to look at the weekly candlestick is in the following way. I want to see the market open. I want to see the market create the low by the means of a manipulation. And then I want to see the market distribute to the upside and then close inside of this exact structure. So basically, this is how, or on a basic explanation, this is how the AMD looks like. We have the accumulation at the open. We have the manipulation shortly after to take on the opposing liquidity pools opposing to our bias, our smart money determined bias. And then we're going to have the weekly distribution. And this concept, I want you to understand the fact that this applies to every singular time frame. The 15-minute chart, whether we're looking at the 1-minute chart, this also applies to all time frames. But we're going to look at it from a weekly bias or a weekly perspective. How do I use or how to use the AMD on a weekly basis? So first of all, what I want you to understand is that we need a bias, which is either higher or lower. So that's the only thing that matters when we're talking about bias, higher or lower. And if we're not sure, we will decide to stay sidelined or wait for more information or trade intra-week volatility. And intra-week volatility or intraday volatility is when the market has no clear direction to or target, leaving us to trade intraday runs on liquidity. So if we cannot determine whether the market is going to be one-sided to the upside or one-sided to the downside, we are going to be left with an intraday volatility perspective, which means that if the market goes above a level of buy side on a 15-minute chart, I'm going to try and get into a shorting position. And I'm not trying to get a prolonged run. I'm just trying to get small surgical strikes on a 1-minute chart, targeting the opposing inefficiencies and not for a big distanced run. What we're going to do after is we're going to use the high impact news drivers to determine when we are likely to see the weekly distribution, because this allows us to trade with only looking for a specific run to occur. So only within the weekly distribution, we're going to filter out all of the accumulation and the manipulation. This allows us to trade with a high degree of probability, and this also, again, allows us to filter out the runs in the opposing direction when the weekly manipulation occurs. Once we have the bias and the when, we do not trade the days in which we anticipate the weekly manipulation to occur, filtering out the consolidations and going in directly in the days with the highest degree of probability. And this is how a standard week without weekly impacting news drivers looks like, or how I approach it. For this specific week, what I will go into the market looking for is the following. I will have a bullish weekly bias. Let's just assume that we looked at the chart, we determined the fact that the market is going to move bullishly for the week. The second step that I do is I observe the high impact news drivers. I'm going to have, by that, we're going to have no high impact news drivers on Monday. That's how it usually occurs. Or low impact news drivers on Monday, but we do not care about those. We're going to have Tuesday, Wednesday, Thursday, and Friday. We're going to have 8:30 to 10 o'clock high impact news drivers, but we're not going to have the specific news drivers that are weekly impacting. So that's the number one thing that I want you to understand. The third step is to understand that the weekly manipulation will occur during Monday and Tuesday. P.S. If distribution starts on Tuesday and I decide that we saw the market create the low of the week on Monday using institutional order flow signatures and underlying market structure highlights the same, I will go in and also trade Tuesday, which is what usually happens. Therefore, my trading days will be Tuesday, Wednesday, Thursday, Friday, if Thursday didn't reach the weekly objective. So this is the weekly perspective, which can be seen on a 1-hour chart. To look at the weekly chart on an hourly perspective, what we're going to do is we're going to project the Sunday's opening price on to the week. And what is below on a weekly bullish bias is going to be the manipulation for the week, and what is above is going to be a part of the distribution. The likely scenario that will happen throughout the week is the following. We're going to have Monday to create the accumulation, which is correlated with the algorithmic phase of the consolidation. In the second day, what I want to see is the market creating the manipulation and perhaps the expansion to the upside in a bullish week. So sometimes I will go in and try and trade Tuesday if the market allows it. And what I do with my filtering out system, what I do with the high impact news drivers, knowing the fact that we have high impact news drivers on Wednesday, Thursday, Friday, and I have Thursday 2 times here. But what I'm going to do is I'm going to filter out Monday's trading, and I'm going to go directly into Wednesday, Thursday, and Friday looking for high prices, because I know the fact that the low of the week has been already created and we are trading within the weekly distribution. The high impact news drivers. The major high impact news drivers that impact the week are the following. We're going to have NFP Friday, seen as non-farm employment change on 8:30 a.m. ET on every first week or the last week of the month. We're going to have the CPI event, seen as CPI or core CPI, which usually is on a Wednesday at 8:30 a.m. AT or ET. We're going to have the FOMC event, which is seen as FOMC statement plus federal funds rate, usually on a Wednesday at 2 p.m. ET. And we're going to also have the USD bank holiday, which is seen, of course, as the USD bank holiday. Weekly influencing high impact news driver rule sets or rules. So for the NFP Friday, what I will do is I will trade Monday instead of my weekly bias, and I'm going to try and trade the AM session, and I'm mostly an AM session trader. And what I will do is I will filter out Tuesday, Wednesday, and Thursday trading, as they are prone to consolidate to accumulate orders for the NFP on Friday. What I will do next is I will try and trade the Friday 8:30 NFP afterwards. So I'm not going to trade before it, I'm going to trade after the NFP on Friday, wanting to see a level of sell side being taken first. So if I have a bullish weekly bias and I have an unrealized target above the market, what I will do is I will go in and I will look for a level of sell side to be taken first. And when that occurs, I'm going to look for the opposing buy side liquidity pools to target, and this is exactly what my model states. CPI Wednesday. For the CPI Wednesday, what I will do is I will trade after the 8:30 CPI on Wednesday, directing my focus on Wednesday, Thursday, Friday, if the high of the week has not been formed already. So I will filter out the Monday and Tuesday, which are the days ahead, which are more likely to consolidate or to create the manipulation for the week. For the USD bank holiday, what I will do is I will not trade the day in which the bank holiday occurs, and I will also filter out the day after the bank holiday, because they are more prone to consolidation and creating the manipulation for the week for the market to later on create the weekly distribution. And for the FOMC news drivers on Wednesday 2 p.m., I will trade Monday and Tuesday pre 9:30. So Monday is going to be a normal trading day. Tuesday I'm going to have pre-market trading. So I'm going to trade between 7 o'clock and 8:30. And after the 2 p.m., news release, and I will filter out Tuesdays 9:30 to 12 o'clock and the PM session. High impact news drivers. If we do not have any weekly influencing high impact news drivers, I will look for the 8:30 a.m. ET advanced GDP, 8:30 a.m. ET unemployment claims, 8:30 a.m. ET core PC price index, 8:30 a.m. ET employment cost index, plus the other ones that were not mentioned inside the weekly influencing major high impact news drivers. And also the 10 o'clock news drivers that again were not mentioned inside of the weekly influencing major high impact news drivers. Intraday high impact news drivers. If I'm going to look at the daily chart and I'm going to try and see it from a 15-minute perspective or a 1 hour perspective, what I will do is I will use the same accumulation, manipulation, and distribution perspective, but I will just apply it to the time of day, and I will use the New York midnight opening price as a means of anchoring where the daily open occurs, and anything below it is going to be a manipulation, which most of the times occurs in the London session. And what I anticipate throughout the 8:30 to or 10 o'clock high impact news drivers is, if I have anticipated a bullish day within the weekly bias, what I will do is I will go in and look for, first of all, a run on sell stops, so a sell stops raid, and after that occurs, I want to see the market shift within a 1 minute chart, targeting the opposing high impact news drivers by stops. The futures standard daily profile, or the AMD. If I'm going to look at, or if I had to give a general rule of thumb for the daily profile that I'm anticipating for the NASDAQ, this would be it. So we're going to have the open, which is going to be very close to the London session. So we're going to accumulate throughout the Asian session. We're going to have then London creating the low of the day or the daily manipulation between 2 o'clock and 5 o'clock. What I'm going to look forward to is the AM distribution between 8:30 ET and 11 o'clock to 12 o'clock. So this is the time period in which I'm looking for the market to distribute upon my daily premise or my daily idea. I'm going to want to see the market consolidate between 12 o'clock p.m. ET and 1:30 p.m. ET, basically what I wanted to state. I'm going to want to see the market to consolidate in a normal market environment, and then I'm going to want to see another distribution once we've taken the launch sell stops between 13:30 and 15, and lastly the last hour trading closing, which is going to occur between 15 and 16:30. How do I use this information? In a specific context, given that I am correct within my weekly determination, I will go into the specific date that I'm determined to trade, or I have determined based on the weekly bias and narrative. Inside of that day, I'm going to go into the specific session in which I anticipate the market to create the distribution for the day. I'm going to expect, or I'm going to anticipate the market to distribute in both the daily and the weekly in that session, in that day. I'm going to wait for a previous level of sell side to be taken, and I'm going to wait for 1 minute market structure shift inside a specific time of session, inside of a macro time period, which I will detail in the next lectures. And what I will do next is I will constantly weigh out if my narrative is correct by using 15-minute and 1-minute institutional order flow signatures. In the next lecture, we will have a specific example in which I detail how I use these in my trading, and a specific example in which I was wrong, and detail how or what I learned from that experience, and also how and also what. This was the video. This was the lecture. I hope you guys enjoyed this one. I'll see you in the next one.